Hey everyone, and welcome to this explainer. Today, we're jumping right into something absolutely crucial, the massive, literally life-changing payoff of small, consistent habits. Look, you do not need to be rich to start investing. You don't need some secret algorithm, and you definitely don't need to quit your day job to sit around staring at stock charts all day.
$44,764. That right there, that's a projected portfolio value you can build using literally just the phone in your hand. And about what you'd spend on, a couple of food delivery orders every week. I know. It sounds kind of like a cheesy late-night sales pitch, but I promise you, there's no magic here. It's just math. And today, we're going to walk through the exact step-by-step process to make it happen, taking you from zero to fully invested.
Okay, let's dive into this. Let's be real for a second and ask, why do most people not invest? Well, it's almost never because they're lazy or because they don't care about their future. No. It's because the whole world of finance is, honestly, essentially designed to feel intimidating. It's this crazy universe filled with jargon, confusing acronyms, and people in suits yelling about bulls and bears on TV. And all that noise? It builds three massive mental walls that stop people cold. So let's tear them down, one by one.
Wall number one, the "I don't have enough money" myth. We constantly see headlines about billionaires, right? So we just assume you need a massive fortune to even get in the game. The idea of starting with just $50 almost feels, well, pointless to some people. But here is the secret. Consistency is infinitely more powerful than a big starting number. Starting with $50 builds the absolute most vital habit of all, the habit of just starting. It's the most important muscle you can develop for long-term financial success. It's really not about having a billionaire's fortune. It's just about getting off the starting line.
Then we have the second wall, the "it's too complicated" myth. People think you need some advanced economics degree or like a crystal ball to figure out what to buy, but you don't need to pick the next Tesla or the next Amazon. Actually, trying to do that, gambling on individual stocks and sweating over daily price charts is pretty much one of the fastest ways to lose your money. We are totally shifting the goal today. You don't need to be a stock-picking genius. Your goal is simply to be a disciplined owner of the broader market, just holding a tiny piece of everything. It's shockingly simple once you see it.
And finally, the third wall, the "it's too risky" myth. So many of us hear stock market and immediately picture the 2008 crash. We view it as a giant casino. And yeah, for sure, all investing carries some risk. But the reality? Diversification cushions the blow. There is a massive, massive difference between gambling your money on one speculative company versus strategically investing in hundreds of the world's biggest companies all at once. By spreading your money out like that, you fundamentally reduce your risk if any single company happens to have a bad year.
So the crucial point is this. Getting over those mental walls isn't about becoming a financial expert overnight. It's honestly just a mindset shift. You just need a plan and the discipline to stick with it. Believe it or not, you can set up this entire wealth-building machine on your lunch break in under an hour using huge beginner-friendly platforms like Fidelity, Vanguard, or Charles Schwab. Let's walk through exactly how to execute these 4 steps to Autopilot wealth.
Step 1 is to open a brokerage account. And I really want to demystify this completely for you. A brokerage account is literally just a type of account that lets you buy and sell investments. Opening one is totally free, and the online application asks for the exact same standard legal info you'd use to open a regular, everyday checking account at your local bank. Your name, address, date of birth, and social security number. You submit that, wait a couple of business days for them to verify it, and boom, you are good to go. It really is that easy.
All right, step 2 is funding the account. Once you're approved, the platform will clearly guide you to link your regular bank account using your routing and account numbers. Super standard stuff. After a quick verification, you just transfer your first $50. Now, it might take a day or two for the funds to officially settle in the account, but initiating that transfer, that takes way less time than scrolling through your social media feed.
Step 3 is choosing the investment. Now, this is usually where people freeze up, but remember, we're totally eliminating the jargon today. We are not picking individual stocks. Instead, we are buying an index fund ETF. Think of an ETF kind of like a huge basket of groceries. Instead of going to the store and buying one apple, one box of cereal, and one carton of milk all individually, you buy one prepackaged basket that already contains a little bit of everything. So when you buy just one share of an S&P 500 ETF, you are buying a basket holding a tiny piece of Apple, Microsoft, Amazon, and 497 other major US players. You get instant diversification with a single click.
To get a bit more specific, 2 of the absolute most popular low-cost ETFs for this strategy are VOO and VTI. VOO tracks the 500 biggest U.S. companies. It's the classic choice. VTI is even broader, tracking over 3,500 companies, which is, well, pretty much the entire U.S. stock market. So, which is better? Honestly, please don't overthink this. Their long-term performance has been incredibly similar. For the sake of our example today, we're going to proceed with VOO, but you really cannot go wrong either way.
Now for step 4. And guys, I cannot stress this enough. This is absolutely the most vital step of this entire explainer. We are putting it on autopilot. Inside your account, you'll find an option to set up a recurring investment. You enter the ticker symbol VOO, type in $50, set the frequency to weekly, pick a start date, and automate the funding right from your bank. By doing this one thing, you completely remove human emotion, forgetfulness, and, let's be real, laziness from the equation. The brokerage automatically pulls and invests that $50 every single week without you lifting a finger.
So let's see what happens when we let time do all the heavy lifting. This introduces what I like to call the compound growth engine. It's where your money literally starts making its own money. Now, I want to be very clear here. What we're about to look at are projections. They're based on a historical U.S. stock market nominal average return of around 10% annually. Obviously, this is not a guarantee. Some years are way up, some are down, and this is before factoring in inflation. But this historical average perfectly illustrates the absolutely incredible work that compound growth does for you over decades.
And this brilliantly illustrates exactly what we're talking about. If we start with 0 and just automate $50 a week at that 10% average, let's jump to year 5. You've put in $13,000 of your own cash, and it's projected at nearly $17,000. Nice, right? But look at year 10. You've invested $26,000 out of pocket, but your projected value hits that $44,764 mark. That is over $18,700 in pure automated growth, money that your money earned for you simply because you set up the system and walked away.
But watch what happens when the snowball really starts rolling. By year 20, you're crossing $164,000, and by year 30, you hit an astonishing $468,760. I mean, in that third decade alone, your portfolio is projected to grow by over $300,000 purely through the magic of time and consistency. Seriously, this isn't some shady get-rich-quick scheme. It is just the mathematical reality that consistent compounding yields massive, massive results. All right, now let's ground all this astronomical math back into daily reality. The hardest part of this entire process? It isn't clicking buttons on a website. It's finding that $50 a week. But let's break that down. $50 a week is roughly $7 a day. $7. That is literally the cost of one fancy coffee and a scone. It's just choosing to pack a lunch one day a week instead of firing up a delivery app. It's finally canceling those 2 streaming subscriptions you forgot you're even paying for. You know, the ones you haven't even opened since 2021? Small, almost unnoticeable lifestyle tweaks are what fund this entire wealth-building machine. So ask yourself, are those passing daily conveniences really worth giving up a future with nearly $500,000 in it? You do not have to be an expert to do this. You don't have to time the market, and you definitely don't have to stress over picking individual stocks. You just have to set up the system, start, and then go live your life. Just let the automated system do the heavy lifting for you. Thanks so much for joining me on this explainer, and I highly, highly encourage you to take that first step today.